Tesla up 8%. The EV maker notching a record profit in the quarter, beating analyst expectations on the top and bottom lines. That is despite continued headwinds in its supply chain and the COVID shutdown at the company's gigafactory in Shanghai. CEO Elon Musk saying he's optimistic about a production rebound in China during the earnings call last night. Take a listen.
Yeah, we did lose a lot of important days of production, and there are sort of upstream supplier challenges where a lot of suppliers also lost many days of production. But Tesla Shanghai, Giga Shanghai, is coming back with a vengeance. So I think, notwithstanding new issues that arise, I think we will see record output per week from Giga Shanghai this quarter, albeit we are missing a couple of weeks.
Well, to help us dig deeper into the numbers, we've got a Tesla bull and a Tesla bear. Craig Irwin is Roth Capital Partners Managing Director and Senior Research Analyst. He's joining us alongside Wedbush Securities Managing Director and Senior Equity Analyst Dan Ives. Good to have both of you here today. Dan, let's start with you. We heard from Elon Musk saying yesterday that he's confident of a 50% growth in vehicle production. He thinks they can even hit 60%. How much of this, you think, Dan, is possible when you consider where the Shanghai factory is right now and the fact that the gigafactories in Austin as well as Berlin haven't fully ramped up yet?
Well, I think that was the main takeaway from the call. I mean, just giving back against the wall. Everything that they're seeing in China in terms of the 3-week shutdown, that's probably about 50,000 units at least that come out of Q2. The fact that Musk talked about even 60%, I mean, that's really what investors are focused on today. And I think it just shows that, they continue to be able to navigate better than any other automaker, as well as ASPs continue to increase. And the software model, that's what's shining here and what's been a dark market, especially for automakers.
Craig, in looking at where the price is trading right now in terms of shares of Tesla, you've got a price target of $250, 12-month price target there. What did you hear on the call yesterday that leads you to think maybe the company may not be able to hit its target?
So I've never said the company is not going to meet its targets, right? I think Tesla is a category king. They are showing everybody how to execute, and that, Tesla's a great company. So the reason that I'm bearish is I believe if you look at the big picture and you say 900,000 cars produced last year versus Toyota, which produced 9 million, there's nothing that Tesla has that Toyota couldn't bring to market rapidly. Tesla's got $1 trillion valuation. Toyota has a $300 billion valuation. Tesla's valued more than the rest of the automotive industry combined. So Netflix got absolutely taken apart yesterday because of share losses. And there is no question that at some point over the next small number of years, you will see Tesla start seeing some dramatic share losses. There's going to be more than 500 EVs on the road in North America and Europe by the end of 25. And Tesla will face some real competition, margin pressure. The portfolio diversification is going to go into lower margin products. I think people are much better off in other companies if they want to invest in equities in the EV sector. Although I have to say, Tesla is a fantastic company, just egregiously overvalued.
So, Dan, you heard Craig there say that there are better plays in the EV space than Tesla. You've got a 12-month price target of $1,400. What's your counter?
Look, I think Craig brings up, when you talk about the EV market, you're going to have competition across the board, not just in Europe, but also in the U.S. and China. I mean, our view, and obviously we differ here with Craig, and I think a lot of the more the pundits of Tesla, that we don't view Tesla as an automotive company. We view it as a disruptive technology company. And I think that's really the misnomer in terms of our view in Tesla. But it just comes down to they hated it at 50 billion. They hated it at 100 billion valuation. They'll despise it at $1 trillion. And I think it just continues to sort of be that emotional bull bear story. But in my opinion, this is a stock that's going to further grow into the valuation. But there's going to be other winners too, not just Tesla, which speaks to our thesis on EVs.
Craig, I'm looking at Dan's notes here. 1.5 million units of deliveries for the year is hittable, is what Dan says. Do you agree with that?
I'm sorry, I missed what you said.
1.5 million units of deliveries for the year. You think that's achievable?
I actually think there's probably upside to that. I've been a big believer that the mini car are coming. The mini car, I'm surprised it's so late, given what I understand Elon said to a bunch of other people in the last, couple of years. And I'm really surprised that India is so late too. So I think there's actually room for upside there, even without those things. You look at what's going on in Europe right now. A lot of consumers are really thinking about energy security themselves, even though governments and regulators have been slow to actually take action with the unfortunate, dramatic situation in Europe. I think you're going to see sales acceleration in Europe. I'm surprised they didn't talk about foot traffic on the call last night. There's upside to those numbers. Doesn't change the fact they're egregiously overvalued. And there's any one of 100 different companies that can bring the exact same thing to market. Technology company, so what? There's technology in every freaking car on the road these days. You look at the history of that technology, it goes down in price, down in margin continuously. So Tesla faces a very stiff competitive environment that's developing right now. They are the category king, a fantastic company. They set the pace, but they're not going to operate in a vacuum forever. And, disruptive technology comes from a variety of different places. And I think there's some fatal flaws in their approach around some of the different key technologies that they're trying to bring to market.
Dan, let's talk about the Robotaxi. This is, of course, the autonomous vehicle that Elon Musk has talked about. No steering wheel, no pedals. We heard from him yesterday saying he thinks that Tesla could reach volume production by 2024 and that it's going to be a massive growth driver. How significant do you think it's going to be?
Look, we don't factor that into our valuation. So I just view it as that's more of a prove me. Obviously, when it comes to FSD, that's a big part of the Tesla story when we look out from 2025 onward. And obviously, Musk is caught in slack here in terms of just over-promising and under-delivering. But I think Craig would agree. I think FSD overall is going to be a huge driver for the automotive industry. I think incrementally, in my opinion, to the valuation of Tesla. But to be clear, I view that as cherry on top of the sundae. We don't need that, to see a 1,400 base case.
Craig Irwin and Dan Ives, good to have you both on. Appreciate the time.